Hello everyone, and welcome to my stock analysis video on AMD. So a quick reminder as to why I decided to cover AMD. I did a video previously that I posted where I analyzed all of the semiconductor, all of the chip stocks, and I tried to find which is the most compelling chip stock in terms of next 4-quarter revenue, so next 12-month revenue, and in terms of valuation metrics, mostly enterprise value and forward gross profit, as well as enterprise value on free cash flow. And the company that had both the highest growth rate out of all of the chip stocks and the cheapest valuation was AMD. Now, I already own AMD. I own both AMD and Nvidia. But when I studied the number and look at both companies, it seems to me like AMD is a much more compelling buy right now than Nvidia. So hence the reason why I'm doing an in-depth analysis on AMD. So I'll link to the video comparing the valuation of those 4 stocks in the prior video. And I've included Tesla as well if you want to compare the valuation of high growth chip stocks with another popular growth stock. You can see that actually. I would argue that AMD is pretty well valued. I mean, it's a pretty low valuation. No investment advice, of course, but I love AMD and I want to just tell you why I love AMD in this video. So let's get started. So why do I like AMD? AMD, of course, deals with chips, so semiconductors, right? What you engrave on that wafer, that's going to make that chip for the future. And AMD focuses on 4 main areas, 4 main uses for those chips, right? So the first one is the data centers with CPUs and GPUs. The reason why a company like AMD is doing so well right now is because of its GPU focus, because GPU is the most important part of machine learning and AI. They're very, very important in AI. CPUs have kind of lost that AI race to GPUs, and thus companies like AMD and Nvidia, both leaders in GPU, got propelled as the next big thing in chip stocks. So all of it is somewhat linked to GPUs, but data centers is the main bet that you do whenever you buy one of these chip stocks. It's the main bet because, of course, this machine learning takes place in the cloud, in a data center. So you can see if you look at AMD, all of their software, all of their hardware is available in those cloud companies, in those cloud services like Amazon Web Services. So data center is the biggest chunk of the business. Well, the second biggest actually after games, but it's about the same. It's about 29% of revenue for AMD is data center, so pretty high. Then you have client chips. So client chips, that would be things that you have on notebooks, on desktops, and that's 18% of sales right now. And of course, it's way down because laptop sales are down because we're not after the events of 2020 anymore. So fewer people are buying laptops right now. They overstocked on laptops, so way down 40% year over year. But that was to be expected. Then you have gaming. So gaming is what most of us may know AMD for. They're known for making graphics cards. And gaming is also 29% of their sales. And right now, gaming is only growing at 14% because I would argue there's a big glut in cards, in graphics cards right now due to the end of Ethereum mining in crypto. So there's been a little bit of a shock to the market in the gaming market. So, but still growing 14% year over year, which is pretty impressive. And then lastly, you have the embedded chips, or the systems on a chip, as they call them. And so this is mostly coming from their acquisition of Xilinx. Which really is one of the reasons why this company is expected to grow so much next year, is because now they have a fully diversified lineup of chips that can satisfy different parts of the market. So the more legacy part of the market is really the client, the CPUs and GPUs in your laptops and desktop. That's more legacy. The faster growing parts of the market are data centers, gaming, and embedded chips. These are all growing pretty fast, knowing that data center sales is what is growing the fastest for a company like AMD. But embedded is probably going to catch up. So what I love about AMD is that diversification. You really have 4 buckets, which I think eventually, because, for example, client is way down, but eventually this is going to normalize. So I believe eventually these buckets will be about the same size. So it's I would argue a more stable bet, and that's important because chips are very cyclical. It's typically a very cyclical industry, and when you buy AMD, you're really buying your advanced micro devices, right? AMD across a broad spectrum of potential applications. Now, one of the biggest questions, right, is we can't talk about AMD in a vacuum. We have to talk about Nvidia. Those companies are kind of frenemies. They go kind of hand in hand. So let me just take a quick look through AMD versus Nvidia. And Nvidia, by the way, is considered widely by professionals, by gamers, considered to be a little better than AMD in terms of the products and in terms of the gaming performance. But that's okay. I mean, they are in a duopoly, and there's always going to be room for a first and a second player. And AMD has a lot of products that Nvidia doesn't have. Like AMD has really good CPU, has really good embedded chips. So they have products that Nvidia does not have. So let me just walk you through. So as we said, 29%, 18%, 29%, and 23%. So pretty evenly spread out. If you buy Nvidia, you're mostly only betting on the data center and the gaming revenue. And so Nvidia still has significantly more revenue from gaming than it does data center. And it's got 2 nascent divisions with professional visualization and automotive. But although they've made some strides with their visualization tools, like in movies and with software, this is growing, of course, but this is still a minor part of their business compared to AMD, who has a much more diversified product line. Now, don't read anything into this. I own both companies, and I think they're both great companies, but I like that AMD is perhaps more diversified, and it is way cheaper. It is way cheaper to buy AMD right now. So the point I'm trying to make is AMD, just like Nvidia, has top-of-the-line product. Yes, Nvidia gets the lion's share of the media, but that does not mean that AMD does not have good products. And so let me just walk you through some examples of the products that AMD does. For example, did you know that AMD is powering the gaming system and the entertainment system, infotainment system in Tesla? In Teslas going forward. And so they will be in more and more Teslas as you go forward. And that's kind of a big deal, because Tesla is going to try to go for the best. And so the fact that they have their embedded APUs within Tesla's high-end product, and Tesla will roll it out to further products, is kind of an external validation that really the products that AMD releases are top-of-the-line products. But let me go on. That's not it. AMD is very, very competitive in the data center, and even though Nvidia is even more competitive in the data center, AMD is really outcompeting Intel and getting Intel out of the data center, especially because of its EPIC line of chips. It's the name of it, EPIC, right? Because of its EPIC line of chip, they are really, really outcompeting a lot of the Intel legacy market, and so they're doing really, really well with these embedded chips, with this chip that do both CPU and GPU at the same time, and they have products that are very, very competitive, a very broad product portfolio that is very competitive in the data center space. And by the way, I suggest if you're interested, if you want to learn more, it's fascinating. There's always keynotes that you can look. And so what I do oftentimes is I'll watch the Nvidia keynote, and then I'll watch the AMD keynote. These come typically in September, and you can really compare both keynotes, and you see that the products are pretty similar products. I would argue. I realize that Nvidia tends to be perceived as the better one, but it may depend on choice. All right, lastly, I'll finish with the gaming division. So of course, there's always this debate among gamers with GPUs, which is the best, which is not the best, etc. I would argue here once again that gamers tend to prefer Nvidia. That being said, corporate buyers, like large buyers of chips, really, really love AMD. And did you know that AMD was providing chips for Xbox, Nintendo, and PlayStation? And so if the chips that AMD makes are good enough for Microsoft, I would argue they're good enough for anyone. That's a big deal. That's big external validation that Microsoft has been installing and setting up AMD chips in its software. And you can see there are over 227 million homes just through the gaming consoles. And remember, this is a huge market, huge market. Gaming is a tremendous market. In fact, that was most of what both of these companies, Nvidia and AMD, were doing before the data center. So now they're diversifying. AMD is more diversified. All right, let me get into the numbers. So let's talk about the numbers. Revenue growth, well, there is some cyclicality in AMD, but I would argue there is less cyclicality than there's been in the past. Recently, AMD has just been up. As far as revenue growth, of course, the market sentiment is a whole different animal. But as far as revenue growth, it's been up ever since late 2018. But before that, 2015, they've really have a kind of a S-shaped revenue growth where they've grown. It's an S, right? It's not exponential. It's an S-shape. They've really grown consistently, which is very, very impressive. And even though right now Q4 and Q3 we may see some cyclicality in those numbers because of harder comps, over the long run, revenue growth is expected to resume by quite a long way next year, because they're expected to have 37% forward revenue growth in the next 12 months. And so that is a company that is growing very, very fast despite its significant size in the chip sector. So let me talk about other aspects now. I want to talk about competition. There is competition from Nvidia. I've said it a lot, but there's also another competition that we need to take into account whenever we talk about chips. It's the whole ASICs movement. You know, Qualcomm has paid a price with Apple because they've developed their own chips. It seems like Broadcom may also pay a price because Apple's looking to develop their own chips. So large corporations that sell directly to the consumer, typically sometimes they want to develop their ASICs, application specific interface circuit. These ASICs, when developed by the firm, you know, they just contract directly with TSMC or Samsung or a foundry. And they'll be like, oh, make the chips for us, and they design their own chips. So this is also, I would argue, a threat. The reason why I put it green here is because the AI market is going to be so huge that I really think this is a company that's going to be able to sell everything that it makes, just because the needs for these chips is so high right now with AI. Concentration, no. I love the diversification that AMD has. You could argue that Nvidia has more concentration than AMD. Customer retention, right? So they have some somewhat recurring revenue, I would argue, with some of their data center sales, some of their gaming partnerships, but some of it is also cyclical. So I would say half and half. Like, it's not fully cyclical because it's so diversified, but you're going to have some bumps along the way, which means that, you know, right now, not investment advice, but right now I would argue it's a good time to buy AMD because they are kind of ending a slump in sales, and sales are going to resume next year. So when sales resume, what's going to happen to the stock? Well, my guess it's going to be very good, but not investment advice, of course. And we have some macro sensitivity, of course, to interest rates in a way, as companies invest less because they fear a recession. But we also have geopolitical uncertainty here with the U.S. government restricting the sales of certain sorts of chips to China. So that's also a risk to think about when we talk about sensitivity to the macro environment, right? I don't necessarily mean only macroeconomics, just the macro environment in general. Okay, let me talk about some of the growth runway. So first of all, data centers. It's one of the biggest trends right now in computing, right? AI, machine learning and AI is becoming prevalent in most businesses. That is how most businesses win these days, or at least are going to win, right? All of the cloud stocks that we love rely on these data centers, and these data centers rely on machine learning. And thus, I believe we have a long growth runway on AI training costs because, these chips need to be installed somewhere, and they're going to be installed in data centers. So that's a big one. I love that they do embedded chips because, of course, automobiles are moving from an appliance, right? A gas car is an appliance, and it's moving from being an appliance to being a consumer electronic good. Nowadays, a car is closer to consumer electronics, closer to a smartphone than it is to an appliance like a gas car. So cars are not appliances anymore. They're consumer electronic. And if a car is a consumer electronics, that means there's going to need a lot of embedded chips. So that is why Nvidia is investing heavily in auto. And that is where, if I remind you, if you look at the size of the embedded segment for AMD, that is where AMD shines, because AMD has 23% of sales because they bought Xilinx. So they have a lot of their embedded segment already built up. Nvidia is just starting out with their automotive. So I believe this is going to be a major trend, autos. And then lastly, gaming, right? We can't forget about gaming. What is Gen Z doing? What is Gen Z doing for fun nowadays? And I would argue that, and it is my observation of popular culture, I would argue that electronic sport, esports or gaming, however you want to call it, I would argue that it's becoming more and more prominent as the hobby of the masses. So while the hobby of the masses for, say, Gen X was football, or for baby boomers was baseball, the hobby of the mass today seems to be gaming to me. I mean, the more I look, it seems to be gaming. Even if you look at even the generation after Gen Z, right? They love games like Roblox. Gaming to me seems to be the next sport that's going to be popular. And if I think of gaming as electronic sport, I tell myself, well, wait a minute, gaming is going to keep being huge as we move to a point where, say, 30-40% of the population is into gaming, to where we're going to get to a world to where 70-80% is going to get into gaming. So gaming is a huge growth runway, source of growth runway, is a huge tailwind for AMD. So these three aspects, these three mega trends are definitely a big deal, I believe, for AMD. All right, let me move on. Is revenue growth healthy? Well, yes, but you'll see how I get to say yes. I hate the acquisitions in general. I'm against acquisitions in general because of dilution. We'll see this in the next slide. There's huge dilution when you do acquisitions. Most acquisitions don't pay off. And so they did a tremendous acquisition with Xilinx, $49 billion. That was huge. So I don't like them this big, because there's a lot of opportunities for it to go wrong. But this is an orange flag and not a red flag to me. Why? And I'll tell you why. It's because which firm are they going to buy? There's not many firms to buy anymore in this sector. So ARM, we know ARM is not for sale, right? That didn't work out. Nobody's going to buy ARM. So what else is there to buy out there? That's why it mitigates my concern. Like, what is the big chip company that's going to be up for sale that AMD is going to be able to buy? And I would argue, because of antitrust, very few, close to none of them. So in a way, while this was a big risk, not necessarily bad. They're not necessarily bad. They're just risky. Acquisitions are just risky. While this was a risky move from AMD, I don't think they're going to do another big acquisition simply because there's not much to buy. There's not much they can buy. So that's why it's an orange flag. And of course, SG&A. Well, SG&A went up, right? Administration, general expenses went up. And why did they go up? Because of acquisition, right? They have to integrate both companies. So, and they had this whole reorganization, remarketing of the whole company. So SG&A is up, but I believe it will come back down as AMD is a mature company. It's a mature company. The company is more than 50 years old. So it's going to come back down, and I'm not too concerned. So orange flags only. All right, let me move on to the good stuff. And aside from dilution, which I'll get to, there's only good stuff here. Any near-term bankruptcy? No, not at all. Not at all. They have $5.5 billion in cash, way less debt than cash, $2.8 billion. And their free cash flow is $4.6 billion of free cash flow. So this is a company that is anti-fragile. This is a company that is not at risk of bankruptcy, unlike some of the hyper-growth stocks on this channel. Sometimes they're at risk of bankruptcy. AMD, no. AMD has been around. It is a well-connected company that is at the center of so many different value chains. This company, I believe, does not have a bankruptcy risk. Not investment advice. Debt to equity is 0.05, very low. Quasi non-existent, essentially. So wonderful balance sheet here. What about the metrics? Gross profit margin, 51%. That's really, really high. And so a lot of it has to do with these chip companies have kind of a hybrid margin, hybrid between a manufacturer and an intellectual property software type firm. Why? Because they use foundries. So they don't directly do the manufacturing, aside from Intel sometimes, but they don't directly do the manufacturing. That's why they have these kind of hybrid margins. But I would argue this is a really, really, really high margin. I would argue in that world, 51%. Wow, that's very, very good. And if you look at enterprise value over forward gross profit, it's a 7. Remember the chart I showed you earlier. This is the least expensive of them all, of all of the chip companies, and it's actually among the cheapest growth stocks in my coverage universe too. I did another video about that a few days ago. Feel free to look at it. So very inexpensive, I would argue. 25 for EV or free cash flow. Again, that's pretty inexpensive too. P. I don't like P. P can be manipulated. P has depreciation, amortization, all of sorts of optimization. So I typically don't look at P. I don't like P, but P is fairly low, I would argue, for a company. All of these metrics are low. These 3 metrics are low for a company that is growing at 37% over the next 4 quarters. And, is it going to keep growing for a decade? I believe so. Because this company is at the heart of many megatrends. It is at the heart of many megatrends, and so that is wonderful, I would argue. All right, let me move on to dilution. So this is why I don't like acquisitions. We've had an acquisitions, and the shareholders got diluted, right? So from 1.2 to 1.6. So we've had a good chunk of new shares added because of the acquisition. So they may engage in buyback someday and make the shareholders whole. But when you do a stock, all stock purchase, you're going to issue new stock to get a combined company. And anyways, I just don't like acquisitions too much. But that's gonna normalize now, and I don't think I think the risk is over. I think if you're buying now, I think the risk is largely mitigated in the fact that there's very, very much not much left for them to buy. Then let's look at insider ownership. So of course, this is a company that's more than 50 years old. The founders are no longer, and thus I would argue we should look at the ownership of a CEO more from the standpoint of, does she have skin in the game? And I would argue that $284 million. Yes, I would argue that's a lot of skin in the game. The stock is down 50%, and that's what she has now after it's down 50%. So she saw maybe $300 million of her net worth disappear. That has to hurt. That has to sting a little bit. So I would say that she's aligned. She's aligned, even though we're not going to have the billions in alignment that we're used to seeing in so many of the SaaS stocks, because this is a 50-year-old company, and she didn't found it. So that's very nice. So it's not founder-led, but the CEO, I would argue, is a great CEO. She's very stable. She speaks to Wall Street really well, and she's been CEO since 2014. She's a scientist first and foremost. So that's a big deal in that sector, all right? She has her PhD. So that's important stuff, I would argue. I think she's a good CEO. And you can judge that. Just go look at the keynotes and judge for yourself. All right, let me move on with my last metric before I move on to my last slide here. So this is outstanding. Revenue per employee. So this is kind of a metric that I do, kind of the same Elon Musk view, like Twitter has done like 20 different changes in a matter of weeks, and 75% of the staff has been laid off. Thus, the productivity of Twitter is through the roof. And I like to see companies that are very, very productive. AMD is a very, very productive company. The average revenue per employee, so each employee at AMD generates 1.47, so $1.5 million of revenue. So that is just outstanding, and that is actually, in all of the stocks that I've covered on the channel so far, that is the highest. That is absolutely the highest. So this is outstanding. I have nothing else to say. This is absolutely outstanding. Outstanding productivity from the people who work there. All right. Let me finish with the stock price. So the stock price is down as of today, as of the day I post this video. It's down by 54%. So wow, that is not that stock has been sold, right? But I would argue that is indiscriminate sales. It's actually held up pretty well if you compare it to a lot of the other tech stocks. It's held up pretty well. Not much to read in the fact that the market right now, interest rates are going up, so the present value of future cash flow is going down. But I don't think anything fundamental has changed about the company. I think this company is still a highly performing company, and so this is definitely not a sale of the stock because of idiosyncratic issues. This is market risk. This is a market-wide sell-off. So what I will say is that I own AMD and Nvidia. And based on this analysis, and I've analyzed this, did in my head for a while, I think I will increase my allocation to AMD, and I likely fund some of this with some Nvidia sales, or I'll just allocate more to AMD and not change the size of my Nvidia position. I believe AMD right now is a steal. Even though I don't look much at valuation, I look at growth, and growth is so good. It's so much higher for AMD than for Nvidia right now. So I like the growth better. It's more than 30% growth, which is the stocks that I look at this channel. If a stock is more than 30% revenue growth, I'm going to be interested, and there's not that many of those. But this is a great performance for AMD. Let me conclude with, how will AMD perform? Well, these stocks have been outstanding to own for shareholders, and this is the comparison over the past 8 years. That was the title in the thumbnail of the video. So if you had invested in January 2015 until today, Nvidia, you would have averaged a 55% CAGR, and AMD would have averaged a 50% CAGR. So that would have turned 10,000 into 349,000 and 10,000 into 265,000. I believe both companies are going to keep doing very well. They are just at the beginning of their growth trajectory. GPUs are the future of computing, since machine learning is going to be the next big thing, and AI is the next big thing. ChatGPT, all these tools, software that we use, at a fundamental level, their oil is chips, these computer chips. That's the oil that enables all of this compute power. And so these companies are going to be the base layer of all of these innovations. And to me, it's been an outstanding stock to own, and I look forward to owning AMD going forward, and also keeping owning Nvidia. I think both companies are a good pair. They're a good pair to own. And so I'll finish with this. Could it compound at 50% a year for just a few more years? Of course, compounding is going to abate as the company grows, and so maybe it's not going to be 50%. Maybe it's going to be 40 or 30%. Not investment advice, maybe. But let's just assume, $71 right now. If it were to compound at 50% a year for 5 years, that would be a 539. So the compounding effect is huge with this type of company. When you have this level of growth, I mean, it's absolutely huge. Keep in mind that these growth rates are after both stocks fell, 55%, roughly 50 to 55%. Both stocks fell this much, and this is the performance that you have year over year. So it was much higher, right? It was into the 60% before. So again, I think AMD is a well-positioned company to win, and I will be happy to add more to my position. All right. So this hasn't been investment advice. This is just entertainment. Thank you so much for watching. Really appreciate it. Don't forget to like my video And please subscribe. I see so many people who watch my videos and they're not subscribed, and I kind of want the motivation to keep going. And so subscribers, whenever I get a new subscriber, I'm very grateful for your time. And so yeah, please encourage me to keep going. And if you subscribe, that's a vote for me to keep going. So thank you very much. Thanks for your feedback. Thanks for your comments, and have a great day. Thank you for watching.